Greetings from the Charter School Office. I'm Albert Bertram, the Finance Specialist for the office. So this sheet is a review of the audited financial statements. It essentially takes the audit that's 40, 50 pages and summarizes it into 4 or 5 pages. So I'm going to go through this, show where a couple of things are from, and then show you where it's all at on this sheet so we're all on the same page. This is a form of communication between myself and others in the office, and we use this as part of our renewal information. So we're bringing it to you and bringing it directly to you instead of trying to do regional board trainings and stuff. So this is a new thing, so let us know how you feel about it. So as we move into this, one last thing is, this also lets us compare from year to year. So if you look at this sheet this year and then look at the sheet that comes out next year, you can compare year to year, and it's a lot easier to look at things than trying to dig through big audits to compare things. So that's one of the reasons why we created it. So as we move in, the statement of net position is the first area we'll talk about. This is the assets and liabilities and stuff. So I'll show you where this is at in the audit. So first, as example, look at total assets, $6,581,472. So if we go to the audit, here's our statement of net position, and then you'll see total assets of $6,581,472. So you could go back and look at these other ones if you ever wanted to. This is where you find everything. So we'll go back to our sheet. We'll notice that at the bottom here we have our net position, which is the difference between the two. This ending net position is the June 30th, 2014 amount. This previous net position is the June 30th, 2013 amount. And you'll notice that it declined by a lot and is now negative. There's now a negative net position, meaning there's more liabilities than there are total assets. And we'll get into why that is later on in the sheet. But it's important to know why that happened and what happened. So as we move down in the balance sheet section, these are general fund current assets. I know it's not written on the sheet. I should fix that. General fund current assets. So these are the current assets. Over here we have our fund classification. So we'll go back to the audit. So the balance sheet is 2 pages after the statement of net position. So 1, 2. Again, this is the general fund column right here. We do look at other columns, and like if there's a food service fund or debt service fund or something, we look at that in our office, but it's not reflected on this sheet. So here's your current assets, and then down here we have the fund balance classifications, which there's only one, the unassigned, right here. So we'll go back to our sheet. Here's the current assets. These should match up with what we just looked at. And then here's the one unassigned amount. So just so you know, unassigned is amounts that are available for any purpose. These amounts are reported only in the general fund. There are different classifications. I won't get into those since University Academy doesn't have those. But these definitions are directly in the audit, so you can look those up in audit if you don't know what they are. Moving back up before we move down, this is the general fund activity snapshot. So this takes the beginning general fund balance, the total revenues, the total expenditures, total other financing sources, the net change in fund balance, and then the ending general fund balance. So this shows the activity during the year in a very broad perspective, but it's pretty good to look at for a quick analysis. Below that we have a couple calculations that are based off of this information. General fund divided by revenue takes the ending general fund, divides it by the total revenues. This is barely above zero because this is barely above zero. So the general fund had a large decline. We'll get into that stuff in more detail as we move down the sheet too. So this calculation is general fund, ending general fund, less restricted. So if there's a restricted amount down here, it would subtract that and then divide it by revenues. Then this is general fund divided by expenditures. So ending general fund divided by total expenditures, and then ending general fund divided by beginning general fund. If this is above 100%, there was an increase. If this is below 100%, there was a decrease, and it was well below 100%, therefore there was a large decrease. So one thing I'll say about, before we move on, the expenditures and revenues calculations, this kind of gives a percentage of what's available for a rainy day type situation. It's good to compare that number from year to year. And then the expenditures, some people prefer to use the expenditures, but In years like this year for University Yes Academy, where there's a large capital outlay, that number could be potentially skewed. So it's important to look at both of these and then understand why there's a potential difference between the two. So we'll move back down the sheet. This section here takes the notes section of the audit and summarizes it into tables. So this is kind of a numeric display of that tabled or that note section of the audit. So, and then the notes are included with this sheet on page 4, but we'll get there eventually. So this is your notes payable section would be attributed to your state aid note, which I believe if I labeled it down the notes, SAAN stands for state aid anticipation note. So just so you know, long-term debt is usually a revenue bond or a bond of some sort for most other schools. This University Yes Academy added the Wayne and Joan Weber Foundation debt, which we'll discuss down there. That's what this edition is. So we'll get into that as we move down the sheet again. There was no capital operating leases for a building. This is usually what's associated with a building for another school. So there's a comment here, which I'll get into in a moment as well. Management fees, this is directly from the notes too. So here's the management fees. Then these are just a couple calculations. This is percentage of state aid. So this takes the total management fees and then divides it by the total state aid down here. And then earned divided by fall 2013 takes the management fees and divides it by the fall 2013 count, which is the corresponding count for this fiscal year, ending June 30th, 2014. So here is our total square footage. If this is incorrect, let us know. We will update it and then it will fix all these ratios automatically. They're all formulas. So utilizing that number, we take our total revenues divided by that square footage to come up with a number. Then total expenses or expenditures divided by that square footage. Then the difference. This is really high because of that capital outlay, which we'll get into on the next page. So this is why it's always good to compare both of these, not just look at one. The difference. And then payment per square foot. For other schools, this is usually if they use a bond, I'll take their principal and interest payment on their bond and then divide it by their square footage. If they use the leasing method, I will take their total lease payment for the year and then divide that by the square footage. So it's a means of comparing the two different methods of financing. For University Yes, this number, it was very difficult it wasn't expressly stated in the audit as it is with all of our other schools. So I put this note here. So the payment per square footage, this $7 is based on the loan requires, in the note section it says the loan requires annual principal payments equal to 5% of the state aid foundation grant of the academy. So this calculation takes the total state aid, again on the next page, the total state aid multiplied by 5% and then divided by that square footage. So we will do a follow-up with University Yes in a formal letter or something about some of these issues that we have. So that's what that number is right now. We'll try to figure out what it should be or whatever in a follow-up correspondence. So I just wanted to explain what it was right now. So operations and maintenance per square foot takes the line item of operations and maintenance down here, right here, and then divides that by the total square footage, and then square footage divided by fall 2013 takes the total square footage and divides it by that corresponding fall count. So as we move into the next page, the general fund comparison, this lets you compare the June 30th, 2014 numbers to the June 30th, 2013 numbers, and then the difference is calculated over here. So if you wanted to know what the state aid was this year compared to last year, you could quickly see that, and then here's the difference. So it increased by a lot, which is reflective of the increases in enrollment lately at this school too. So as we move down, you'll be able to compare all these things on your own. If you're curious what these numbers over here are, these are accounting code numbers. So this is how the dollars are separated in the accounting system. So as a quick example, we'll look at basic programs. So we'll go to the accounting manual. I put this in Word. So once it's in Word, you push find, come over here, type in what you're looking for, then go to results, and you can skim through this, and there's the accounting code right there. But if you wanted to know what it actually meant, what it was incorporated in, you'd see the accounting code again right there. And then it's labeled as instructional activities, including enrichment designed primarily to prepare pupils for activities as citizens, family members, and workers, as contrasted with programs designed to improve or overcome physical, mental, social, and or emotional handicaps. Includes pre-kindergarten. So this is just a nice tool. If you can get the accounting manual into Word, you can look stuff up. So it's important to know what all these, we'll go back to our sheet, it's important to know what all these line items are. So if you don't know what something is, we can figure it out for you pretty fast if someone else doesn't know what it is. So the ones down here that don't have numbers, these are not part of support services, so, and they're not part of the template, that's why they don't have numbers. So if you have a question about those, feel free to just ask staff or myself, or we'll figure it out. So as we move down here though, before we move on from this section, you'll notice this capital outlay. This is the attributed with the Joan Weber Foundation information, which we're going to go over in the notes section of this sheet. But that's kind of what increased the expenditures vastly from this year from previous years, and that's dealing with the building. So you can see that was a large increase from last year. It wasn't part of last year's budget. Capital outlay is basically you're doing a capital expenditure in 1 year. So again, hopefully if you don't understand something of one of these items or something, you can ask the question and we'll figure it out for you. And then you can look at what happened from year to year and then try to figure out why that happened. So as we move down, this should be the ending general fund balance that we saw in the upper right hand corner of page 1. So this page is a bigger breakdown of what actually happened in that little box. So this is the detail behind that. And then this is last year's information too, so this is a pretty good sheet. So then down here we have the original budget, the final budget, the actual, and then this note just says that the original budget is due July 1, which is usually well before, well, it is well before the fall count, and the fall count can change the budget dramatically, whether it's increased or decreased. So that's why that note's there to remind myself and others that you got to take that in consideration when you're comparing these. So, and then this budget difference takes the difference between the final and the actual, which it's the same as this because this was 0. And then this is just an error. This usually calculates the percent change, but you can't divide by 0, so it's saying you can't divide by 0. So that's why there's that error there, because this is 0. So as we move down, we'll see these instructions, percent of revenues. This takes the total instruction and divides it by the total revenues and then shows the trend for the 3 years. I'll show you where that's at. So we'll come back up to this part of the sheet. Total instruction divided by total revenues. So that's where this is coming from. Now, you'll notice that there was an increase, or there's a slight decrease, and then there was an increase. So basically just look at the trend. It doesn't always mean that more money is being like this going down doesn't mean that less money was spent in the classroom, or that this means that more money was spent in the classroom. It can change based on, it's essentially a ratio. It just tells you to ask the question why that happened. So if revenue is increased by this much and instruction did increase, but it only increased by this much, you did have an increase in instruction expenditures, but it wasn't at the same rate as revenues increased. So I hope that's a good way to explain it. Another example is if you if a teacher that got paid $50,000 retired, and then a new teacher was hired for say $30,000 or $35,000, that would actually decrease the expenditures, but it's not reflective of the fact that there's one less teacher at the school. So that's just a way to compare things, and it's good to look at things to ask the right questions. So this over here takes total revenues, divides it by the fall 2013 count. This takes the expenditures, divides it by that fall 2013 count. Again, this is a lot because of that capital outlay up here and the difference. So this is just another way to compare from year to year. When you look at this sheet, you can look at stuff and see how it trends. Moving into page 3, this is the enrollment numbers. These numbers are derived from CEPI, which I don't like to use an acronym without explaining what it is. So CEPI is the Center for Educational Performance and Information. So this is a state website that has a lot of data. So to find these numbers, you go to My School Data, and then you put in what you're looking for in the filter, and then here's all the head counts, and then you get these really large spreadsheets. It actually goes down to 91, 92 And then this is where you can look up free and reduced lunch counts, special education counts, that kind of stuff. So these numbers are all derived from CEPI. I dug them all out for you. The last one is the number I received via Epicenter, which is our file retrieval system between the charter school office and the school. That is the number from the DS 4061 sheet. So that's an unaudited number. So that may change from this year to next year. So if you see that number and you're looking at these two sheets and you say, why did that change? That's why it changed. That's unaudited. So if the audited number is different, that will change slightly. This column over here is for the numbers people. This shows the percent change from one count to the next. So for those who are visual people, we have a graphical display down here. This will show your trends. So you'll see that the school has been growing at a pretty rapid pace. And when we've had a couple other schools that have grown at this rate, and it's tough for the revenues to keep up with the expenditures because there's usually a delay in the count, and then the count being blended in, the revenues have to catch up to the expenditures. So that's why we take that in consideration. But the capital outlay is the reason why there's a large the negative net position, that kind of stuff. So, and the large expenditures is for this year. So as we move down, this is the free and reduced lunch count. Again, these ones are all from CEPI, and then this is the percentage of free and reduced lunch count. So this takes the count over here and divides it by that corresponding the fall count. So this takes the total. This 77 divides it by the fall count for 2010, and that's where this percentage comes from. And then below that is the graphical display of the free and reduced lunch counts for the visual people. So as we move down, this is where we get to the note section of the audit, the note section of this sheet, and these notes are all derived from the audit, I should say. So if you notice, there's page numbers. These pages are the audit page numbers, so if you wanted to go look this up yourself, you could. So when I spoke about that capital outlay, there is a building that previously, if we scroll over here, last year, this is the debt section from last year. It says the Academy is the guarantor on a note payable of $5.8 million between New Urban Learning and the Wayne and Joan Weber Foundation. The note is due in 2017. So that's what it said last year. Then this year it said the Academy would assume from New Urban Learning the balance of a loan of $5.8 million payable to the foundation. In exchange, New Urban Learning would transfer certain real estate property so that the building, and then it says the note is still due in 2017. So this is where that payment per square footage calculation came from. The loan requires annual principal payments equal to 5% of the state aid foundation grant of the Academy. So that's why that calculation was done that way. There's no payment schedule on the audit, and there's no amount that was expended on the audit except for the capital outlay, but that's the total amount. So we will probably be doing some inquiry separate from this video. This video is supposed to be instructional, but that's something that we're going to probably have to communicate with the school about and try to figure out. And then we should have been involved with this process before it went from guarantor to assuming this loan. So that's something to consider for the future. So here's all the details. You can read that. I won't go through all that specifically. Here's the management company information. There was no findings, which is good. And then this just talks about the academics. This is from the audit, so I included it, page 16. And then expenditures exceeded appropriations. Before we finish up, for June 30th, 2014, expenditures exceeded appropriations for 10 line items. So originally I didn't have this on here because the sheet's supposed to be 4 pages, but I did include it for you. This is from page 18 of the audit, so I'll show you that real fast. This is page 11, so we're going to have to go, I think page 20 is where it's at. Yep, page 20. So if we come down here, we see all these line items. So this is not something I've created. This is directly from your audit, page 18 of your audit. So we'll go back to the sheet. And this shows that this is the budgeted amount, and this is the actual. So the actual is what was actually expended. And then the variance, it shows the difference between the two. So all of these line items were over expended than what was budgeted by the board. To show you how important that is, we're going to go back to the accounting manual. I got to go to page 104. Just a second, I'll pause this. Alright, I'm back in the accounting manual. I paused for a second, that's why there's a weird transition there. So, violations of the Uniform Budgeting and Accounting Act. So, an administrative officer of the school district or PSA, Public School Academy, shall not incur an expenditure against an appropriation account in excess of the amount authorized by the Board of Education. The administrative officer or an employee of the school district shall not apply or divert money of the school district for the purposes inconsistent with the specified purpose specified in the appropriations of the school board. And then there's the reference to law. So we'll go back to our sheet. All these amounts should have been budgeted before they were expended, and they're technically in violation of the Uniform Budgeting Act. So, and as I just read directly from the accounting manual, especially this capital outlay that was not even budgeted at all. So that's the pretty large capital outlay for something that's not budgeted. So here's all the details, and then here's the total. So this there was also a little bit in the food service fund. And then I printed this down here as the last year debt information that I had up side by side, so I could show you side by side. But you can review it like that. So just take this sheet and put it side by side or whatever. And this is reviewed by someone else in the office. And again, we'll probably have some form of correspondence with the school and communication to address some of these issues that I brought up. I hope that this is beneficial to you, and thanks for all you do for the children of Michigan. We'll be in touch. Bye.